All right, so good morning, good afternoon, and good evening again, to all of you. We'll discuss today about one of my favorite topic, in the CPA board exam, which is the variable and the absorption costing. Again, I will use the materials, of uh, Wiley, So I use this one for the past 20 years. Anyway, so today, class, what I will discuss is explain first the difference, between the absorption and at the same time the variable costing. So our focus here is to uh, explain the difference, so about the absorption and the variable costing. So what is the similarities and the difference between the two, So that's our agenda for today. Anyway, so very important, class, that in terms of this variable in absorption costing, no absorption and variable, is that you have what you call the manufacturing cost, we go back to our definition. What is the meaning of manufacturing costs? Manufacturing costs are all your product costs, and your product cost is your inventoryable cost. That's why the all manufacturing costs are charged to and absorbed by the product under the full or absorption costing. It is known as the full or absorption costing. Okay. And when you say about variable costing naman, it only your direct materials, direct labor, and your variable overhead are considered to be product costs. Okay? While the fixed manufacturing overhead, in the variable costing are to be recognized as the period costs. Okay, again, in the full or absorption costing, all your costs all your product costs, direct materials, direct labor, overhead, are all to be considered as product costs. But in the variable costing, the fixed overhead or the fixed manufacturing overhead are considered as period costs. Okay, we go back to our definitions. What is the difference between product and period cost? Product cost is inventoryable cost, meaning to say it is to be considered as inventory first and eventually will become part of the cost of goods sold. When you say about period costs, it is to be expense outright. That's the main difference between the two. The treatment of our fixed manufacturing overhead. So under the absorption costing, it is to be considered as product cost. Okay, while in the variable costing, the fixed manufacturing overhead are to be considered as period costs. Meaning to say, as absorption costing, it is part of your inventory and eventually will become part of your cost of goods sold. While in the variable costing, it is to be expense outright. Yan, class, ang pagkakaiba ng dalawa. Okay. So, meaning to say, for example, under absorption and the variable costing, all right? As an illustration, for example, Premium Products Corporation manufactures a polyrene sealant that called Fix It for car windshield. And you have your relevant data for the Fix It in January of 1996. And the first month of the production, you have your selling price of 20 pesos per unit or $20 per unit. Then you have your units, you have your produce of 30,000 and sold of 20. If you have 30,000 produced and 20,000 sold, meaning to say your ending would be 10,000. And there is no beginning inventory. And you have your variable unit cost, manufacturing cost of 9. Ibig sabihin, you have your as direct materials of $5, direct labor as at $3, you have the variable overhead of 1. And in terms naman of your selling and admin expense, you have $2, no? And you have your fixed manufacturing overhead of $120,000 and you have your selling and administrative expense of 15,000. So that's our given now because we will differentiate between the variable and the absorption costing later. Okay. So when you have this unit product cost, if you notice, no, if you are under the absorption costing and the variable costing, absorption, all your direct materials, direct labor, overhead, including the variable and fixed, are all to be considered as product costs. While in the variable costing, if you notice, the fixed manufacturing overhead is zero. By the way, direct materials, direct labor, overhead are all given, no, which are the per unit. But how about in terms of your fixed manufacturing overhead? If you notice, given here is only 120,000 in total, but we need to compute for the per unit. Paano yon, sir? Okay, 120 is the given and you should divide it by the unit produced. Please take note, it is to be divided by the unit produced of 30, not unit sold of 20. Why? Because because the fixed cost is not dependent in your fixed cost. Wala akong pakialam, no, in terms of the unit sold because fixed costs will remain the same regardless of the activity level. That's why, class, if you notice, the fixed manufacturing overhead here is that you have 120,000 and you will divide it by 30,000 unit produced and you have $4, no? And the unit cost here, if you notice, direct materials 5, direct labor of 3, variable overhead of 1, and the fixed manufacturing overhead of 4, and you have $13. While in the variable costing, 5, 3, and 1, and 0 would be your fixed manufacturing overhead, and you have 9. The main difference here is that 13 minus 9, you have 4, because the fixed manufacturing overhead are product costs under the full or absorption costing and period costs under the variable costing. Hopefully, you understand, huh? So that's the basic. Okay. So in terms of the absorption versus the variable costing, the income statement here, no, under two costing approaches are shown on these two slides. No? Income from operation. Okay, to class, this is the difference, no? The difference between their net income, no? Under absorption costing is you have 40,000 higher than variable costing. 85 minus 45. There would be a difference of 40,000 difference because you have an ending inventories of 130,000 under absorption costing and 90,000 over or under variable costing. Why? Because in 130, it is to be considered first as inventoriable. So under absorption costing, $40,000 for fixed manufacturing overhead have been deferred muna. I-defer muna natin yan until na maibibenta na natin and become part of your finished goods. So what would be the formula? The formula here is that the ending inventory to be multiplied by your fixed manufacturing overhead. Magkano muna, class, yung ating ending? 30 minus 20, you have 10. 10 to be multiplied by, if I remember right, 4. Ibig sabihin, 10 minus 4, the difference is 40,000. And the same here. You have here 40,000 as the main difference. Okay? Again, ano yung formula natin? Ending inventory to be multiplied by the fixed overhead rate. The ending um, the ending here, no, or the difference here, or the fixed manufacturing overhead, or the ending is you have your 30,000 as unit produced minus 20,000 at unit sold. Kaya 10,000 would be our ending. To prove na tama tayo, you have here your income statement of the absorption costing. You have your sales, 20,000 times 20, given yan. You have 400,000. And you have your cost of goods. Ito yung long cut class, ha. You have 0, the cost of goods manufactured, 30,000 times 13, yung lahat, you have 390. And the cost of goods available for sale, you have 390. O, halimbawa, in the ending inventory, you have 10,000. 10,000 times 13, you have 130, you have 260. how much would be your cost of goods, gross profit, cost of goods sold muna? 260. 400 minus 260, you have 140. And you will less your selling and admin expense of the variable overhead, SG&A, and the fixed SG&A. Given kanina, di ba? 20,000 times 2 plus 15,000, you have 55. Again, we go back to the difference between the two. Ending inventory minus fixed overhead rate. 10,000, the 10,000 is your ending to be multiplied by 4. Dapat ang difference natin ay 40,000 in terms of our income from operation. So, we will check. Ha? Okay, how about naman in the variable costing? Sales, you have 20,000 times 20, no? By the way, alam nyo ba, I have here tech shortcut, no? Wag na ito class, na may beginning pa or okay. What you will do here is that you have 9. 9 times magkano yung naibenta? 20. 180. Okay? So ibig sabihin 9 times 20 uh sorry. Uh the ending pala, sorry. The you have 9, no? So you have here 9. 'Di ba? So you have here uh 13 pala, 13, sorry, 13 because of the absorption. 13 to be multiplied by 20. Ilan yan? Calculator, no? So, if you have 13, so 13 times 20,000. Tama ba class that it is 260? Yes. Cost of goods sold mo is 260. Ganun yung shortcut. Okay? Again, how do we do the shortcut? 20,000 to be multiplied by your by your product cost, which is 13 pesos. How about naman in terms of the variable cost? Ganun din, no? You have variable cost of goods sold, manufactured, or kung ako sa inyo, diretsuhin nyo na, no? So 20,000 times 9, you have 180. Diba? You have variable cost of goods sold of 180. Okay, how about the inventory January 1? 10,000 times 9. Okay, same lang naman yung class, no? In the variable costing, your fixed manufacturing overhead is to be considered as expense outright. So you have 400 variable cost of goods sold muna, 270 minus 90, you have 180. Then you have minus 40 as your selling and the non-expense, you have 220. So 400 minus 220, you have 180. In terms of the fixed overhead natin, so you have manufacturing overhead, which is the fixed and the fixed SG&A of 15. Oh, tama ba class that the difference is 40,000, 85 and 45? Ibig sabihin tama tayo. The difference here is worth 40,000. Okay? And hopefully class you understand no our discussion. Okay, how do we know na mas malaki ang absorption sa variable? If the income is, sorry, if the circumstances we're in, unit produced is the same as unit sales, okay, so ibig sabihin, of course, walang lamang. Absorption costing is equal to the variable costing because i-differ muna natin yung ating assets and to be considered as part of the inventory and cost of goods sold. How about if the unit produced is more than the unit sold? Net absorption costing net income is higher than variable costing. So, if the unit produced is more than the unit sold, mas malaki dapat ang income ng absorption costing. Okay? How about the other way around? No? If the unit produced is less than the unit sold, nga, pwede ba yun? Yes, no, if there would be beginning inventory. For this one, mas malaki na ang income ng variable costing because of the deferment of your inventory. Okay. So, last slide, no? So, what would be the rationale, no, of this variable costing? The rationale is that the variable costing, it focuses on the purpose of the fixed manufacturing cost, which is to have productive facilities and also available for men. And also class you have your absorption costing naman, it justify the assignment of the fixed manufacturing overhead and to the inventory on the basis of these costs are much as cost of getting a product or ready for sale as direct materials and direct labor. And please take note also, class, that the use of the variable costing in a product costing is acceptable only for internal use management. Yan. So, ibig sabihin, as long as it is to be acceptable by the internal use by the management. All right, so that's it, no? So hopefully you will you learn, no, from my discussions. Again, thank you very much and see you soon. Bye bye.